The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we'd like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we're up 26.5 points on the S&P cash, knocking on heaven's door at 2,700 on the S&P cash, 2698.48. Dow's up 198 at 24,558. NASDAQ up 70 at 7337.35 last tick, and the Russell up almost 12 points at 1598.17. So what do we have? Anything approaching any kind of energy as in the way of volume? A little better than yesterday at this time, but again, this is the time of year where we start going from the wintertime volumes to summertime volumes. That is characteristically lighter volume on Mondays and Fridays, and you kind of carry a similar volume in Tuesday, Wednesdays, and Thursdays. But today, we got about 4.2 billion shares on the U.S. equities volume summary from the CBOE. If you want any of these links, just always you can always email me at path@tfnn.com. Anyway, so volume's good. Is it blowout? The answer is no. This is going to be about a maybe 7.3 billion share day if it holds up. I think mostly the volume will come probably later in the day. A lot of people just seems that they've been shorting this market over and over on the way up. At least that's what the numbers suggest. And I suspect that we're going to find some kind of high when those people quit shorting. That's generally the way it works. You get everybody piling in at the very bottoms, and you get everybody afraid to short at the very highs. Maybe that's why the market works the way it does. Got a lot of stocks moving today, and we'll talk about a few of those. Some of them kind of surprising, actually. But you know what? We're just going to have a good day today. Going to do some splaining and some other stuff. But let's get a little bit of history started, and then we'll get into charts.
That it's all just a little bit of history repeating.
And there wasn't any specific history. I did think that of the news the last day, nuclear proliferation certainly is on the plate of just about everybody. If you want some links, there is some links I have to YouTube seminar, the same ones and given by the same person who briefs senators about how nuclear bombs work and proliferation. It's quite informative. There aren't any big formulas in it, but if you're going to have opinion, it's probably good that it's a little bit informed. And you have to know about what the risks are and how they're at. Anyway, the guy that gives this was a former nuclear inspector, and he gives a very good briefing on just what's and how these things come about. Building a bomb, not that hard. Actually getting the material to build a bomb, very hard. And explains all the different ways that people can do it. Probably the most chilling part is the fact that if you get uranium to 20% enrichment, you're 75% of the way to the 82% enrichment that makes a very good nuclear bomb. And that's what everybody's kind of worried about. You can use regular reactors to continually keep moving that up and make fairly decent stuff, but you got the lion's share of what's done, and we have a lot of countries that have nuclear weapons. The most interesting part to me historically is how we got here, and I don't think enough people talk about it. The Pakistanis had their own nuclear program going, and around 1991, a guy named A.Q. Khan, I can't pronounce his first two names, is the head of the Pakistani nuclear program. Of course, they were going at it because the Indians had a nuclear program too, so everybody's got to have a bomb. But once they developed their bomb, which they didn't explode, by the way, everybody, once you got the material and you know what you're doing, you pretty much know the bomb's going to go off. That's why they didn't really have to test the one that they dropped on Hiroshima or Hiroshima. I always wonder which is the correct pronunciation because everybody does both. But this guy went around selling all the technology to everybody, and instead of killing him, as we probably should have, they let him run for a number of years to see all the people he was talking to. And he had basically a supermarket of people that came from his program, the Indian program, the Russian program, of course, in the mid-90s. All those guys were out of work. He had basically a one-stop shop where you could buy the technology you wanted and you needed. It was still difficult, but at least he could tell you how to do it. And you know what? It was like until 2001 and 9/11, we just kind of let him run around, and then told the Pakistanis, you know what, we're just going to nuke him and all his buddies one day. So you can either put him under house arrest because he was a national hero, one of the reasons why we probably didn't do anything else either. But a lot of times it's just kind of a parable. You want to take care of problems when they're small because they just continue getting larger and larger. Yep, that's it. Anyway, A.Q. Khan, if you think that one person can't make a difference in the world, well, he's given at least the secrets to the kingdom to at least 5 different countries that we know of. And probably the most interesting stuff, we found a bunch of their documents. There is one country out there that we don't know who it is. He basically listed everybody's name and who it went to and where it went in the documents that we found in the past, the CIA did. But there's a mysterious 4th customer that no one knows who it is. And they still debate who it is. But why he would name everybody else, he wouldn't name this country, which is always the weirdest thing. Who could it be? Who could it be out there that has a nuclear weapon that no one knows about and no one's sure about? But he didn't name them and never would put it in documents. Everybody else got named but them. On this day, we think about nuclear proliferation. The genie is certainly out of the bottle. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And today is Delta Neutral Day. If you're unfamiliar with that or haven't listened to the show before, there are a few organic things that happen in the market. Fund buying is one of them. One of the others is monthly options expiration. And monthly options expiration gets to a day, and that day is pretty much mathematically set by the amount of decay. It comes out of the Black-Scholes formula, and that is that the risk gets bigger than the reward for options that basically most options start, at least the monthly options, start at either 60 or 90 days, depending, hit the microphone. Don't do that often. Start at either 60 or 90 days out. And so you've got a long time and a lot of premium that can decay. Once you get to today, option market makers don't let those options sit without the equivalent protection on the other side. All they want to do is make sure that those things decay down to nothing if they at all can try. So today is one of the more important days because what we see is option market makers moving everything around. And the way that they move those chairs around on the deck of the big steamship that is this market, man, what a tortured analogy. Anyway, you've got those guys giving fairly decent signals about where they think the market's going to be 7 trading days from now, a week from this Friday. So we'll look at those numbers tonight. I'm going to be doing a webinar a week from Wednesday for subscribers. You can always get in for 30 days. It is risk-free in that you can always get a 30-day back money guarantee on my newsletters. But either one, you're going to be in there. But we're going to talk about the theory of playing options. But even if you don't play options, I think especially the Tech Insider folk today are sitting on a 3-day win of a stock that's got at least 25%, maybe more, depending on how you want to say at what price you got in, but probably around 25% to 27% bounce on a stock. And there's a thing called days to cover. And whether or not you play options or not, you can actually look at this data. And if you want some big rewards, a lot of times this is the place to look at it. But anyway, we've got this stock. We got into it. I love the test as it started to test the low on Thursday. We got into it. We're now what? Into Tuesday, Wednesday? Yeah. So what do you got in this? Well, we had 23 days to cover on just average volume. It was going to take 23 days for the shorts to get off this stock if it started going higher. It had earnings. The earnings were not all that bad, although the news basically said the end of the world was coming. I dug into it a little further and found out that actually revenues were up 25% before the previous quarter. I started digging in there. Things weren't as bad as they thought they were. We got the big dip last Thursday, right? Last Friday. And guess what? We went ahead and bought it and had a huge swing to the upside. But again, when everybody's on one side of the boat, you got to worry about it. And this thing goes the same thing. If literally nobody is short, then who else is there left to buy? Anyway, we'll be talking with Tom at 4:15 today a little bit more about that webinar, but just a few things to think about. I think I'll be talking with Tom about how you can start tracking and figuring out how short a stock is, even though the data is tracking at least 2 weeks behind. There's a few things that you can actually do to improve your odds and figure out what's happened in the last 2 weeks for shorting in a stock that you wanted to look at. And we'll talk to Tom about that. But we'll move along. Anyway, you can give me a call west of the Rockies, 877-927-6648. East of the Rockies, 877-927-6648. And we'll look at a few other stocks. Yeah, unfortunately, the Black Scholes didn't work absolutely perfect for the what was it, mid? Now I'm having it was Merriweather. And what was it? Long-term capital management. There I got. Takes me a while to get anything out. Wingstop broke out with volume a couple of days ago. You had 1.4 million shares at $52. Just checking in on this one. You broke out with 2 million shares on the 4th. It's just kind of got sideways for a few days. But 52 should be support out here. But there are a handful of stocks that actually have broken out on volume. That was one of them. So we're keeping an eye on it. Yes, in fact, there's like 4 books about long-term capital management. I like Paving Wall Street and Inventing Money are 2 of the better books of it. But I read both of them, and I found them highly entertaining and also a parable for any traders that would come behind them thinking that they had some silver bullet that would wipe the market out. Nobody probably ever does. So anyway, Adobe Systems, wanted to watch this one because, of course, it had some fairly decent volume going into the March 20th high, 231 with almost 9 million shares. Got into it on April 18th, 233.17, $2 ahead, closes back below it, but volume falls in half. It pulls back a little bit. It drives farther higher today, 1.9 million shares so far. And I want to start talking about how that volume starts to shrink, and you have to kind of watch it around this time frame. And that is, you probably want to get a few better signals than just one kind of okay signal that maybe you thought last month would have been great for shorting a stock. It's not uncommon to see these stocks, especially in May, have lighter and lighter volume, especially if they have a lot of short interest in them. Just continue going up on lighter volume, and you get, as we've talked about, that light volume all the way into the 3-day weekend come on Memorial Day. And, you know, these things don't have to fall off a cliff. They can stay up there, go sideways. Volume continues to decrease. That makes it harder for shorts to hold. And a lot of times these stocks will they won't go up much. You know, even a $240 stock like this goes up a half a buck, pulls back a quarter, goes up $1. And what are you going to do? You look at that 3-day weekend, and if you're short, you go, well, you know what? It's $5. I'm just going to go ahead and take that off the table because it's Tuesday. I'm going into Friday, then the 3-day weekend. I'm just going to cut out of here on Wednesday. I'm just going to go ahead and cut my losses. And every time someone does that, you get into this feedback loop of not higher volume, but higher prices. And some of the best shorts I've gotten have been off these light volume pushes into 3-day weekends over the summer. We'll be back. Give me a call, 877-927-6648.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, we're looking at Adobe up here. Volume, 1.9 million shares, not that bad. You really were looking for about 9 million shares. probably maybe 10 million shares to break out through this 231. You're not going to get it. So does this mean the wheels instantly fall off the wagon? The answer is no. But most likely you're not going to get very far before these things pull back into the trading range. You know, everybody wants to get out there on the edge right until the fact that they see no one else does, and then they kind of come back. But these things can hang out and kind of drift up and even hold higher prices on lighter volume for those days. Your odds of picking either the Friday into the 3-day weekend or the Tuesday after really accelerate what you're doing. Carbonite saw kind of an interesting gap in this one. Most of these stocks right now, you know, we've already made our lows, so the things I'm seeing now are the tests of the highs. Carbonite, CARB, which is this $33.55 high with volume of 3.88 million shares. That's March 16th. Got into it yesterday with 1.3 million shares. Today you got 400,000 shares. Yesterday a doji. Today, so far, a doji. Just keep an eye on it. My guess is that your trade would be a setup back to the $24 level. Again, though, these things can just hang out here for a while. You need a fairly compelling reason to get in and short right now. Got a couple of days out here that look, what is that? That's the 8th? What is that? Okay, that's the 9th. That's 9th yesterday. Okay. Am I missing something? I think I am. Let's go to this one. Okay, 859. Okay. So coupons.com, another one that looks like it is breaking out. Again, light volume, $50.69, which is 2.5 million shares on March 13th. Yesterday we went through that with 600,000 shares. Today we've got about the same 700,000 shares. But we're going to be light over that 50.69. That one is probably a nice setup, maybe one for expiration that I'll be keeping an eye on. That is coupons.com. Fossil. Now here's one of these stocks where you really want to watch out what's going on in the market for short sales, because this one's got a monster. Let me go back here and actually look this up. Okay, FOSL, right? FOSL. Okay. 9 days to cover on Fossil. This is really where you want to. I don't understand people getting this stock down to $7 before and not being out of your short positions by then. But you still have the short interest is, what is that? 15.8 million shares short on this. Everybody's betting the fact that these watch companies going to go out of business. It's not a one-way street. You can look at the volume here. Last time 42 million shares. Today's 4 million shares. But again, with that kind of short interest, I don't want to be all over a stock that's $18. Can it go up another $5 before it runs all the shorts out and then go back down to $10? The answer is easily yes. But unsurprisingly, as the market starts drifting higher, you're going to see a lot of these stocks that are very tough to hold short, even if you're a long-term holder of these. I had a question on gold out here if I was looking at this one, GLD. And the one thing, and one of the reasons I haven't talked much about it, is the energy off this April 11th high was more than the energy up off that March 1st low, up to that April 11th high, where you had that screaming doji, basically abandoned baby, they call it, shooting star, various terminologies. You came back down. You did test the previous low on lighter volume. You went below it, ticked below it. But again, you're going to have to go sideways for a while if you come down on higher energy, which you actually did off that April 11th. So I'm not chasing gold here. There probably is at least some level of consolidation from that higher energy on the way down. Okay. SMHs. Let's take a quick look. We did go long the SMHs, but we are already out of them. I was looking for this thing to get up to 104. I disliked the lighter volume and the push higher. I thought the thing could actually retreat. This is where you would, well, another 50 cents actually. You want to get into this thing at about 104, maybe 104.50. The downside on trying to pull the trigger on this today is NVIDIA has earnings tomorrow night. And I don't think I want to be, as they say, the pilgrims get the arrows. And I don't think I want to be getting any arrows. So I would wait till tomorrow, see how the NVIDIA earnings go. But yeah, the light volume out here compared to the volume down, you're down on April 19th with 16.5 million shares. You're up today with 2.5. But again, like I said, you want to have an abundance of caution around this time. Volumes are decreasing. There's a lot of people still short these stocks. And until you're sure all the shorts are out, the chances of getting a fairly decent pop in these things, even just to the point where it happens over a couple hours and still runs you out of the market, is still a high possibility. In fact, I think for just risk reward, that's what you're looking at. You want some kind of monster signal, not just gets up there and doesn't have enough volume and kind of pulls back. You want kind of a big shooting star, some kind of, couple point move that just gives it up and lets everybody in the world know that it's got a high in. Ambiguous or just a little better than a flip of a coin stuff, I don't think is going to do it between now and the end of the month. Okay, what else do we have? Okay, Nutanix, NTNX. Another one testing previous highs. Wanted to see how this one was doing. We were looking for 8.8 million shares from that March 2nd, 22nd high. Yeah, 55.25 with 8.8 million shares. Got into it April 18th with 4 million shares pulled back in. Got into it yesterday with 1.8 million shares. Today with 1.4 million shares. So, if you want to be short, I think your time's coming. But, again, I think we talked to somebody on Monday about oil. Maybe it was on Friday. I think it was on Friday. Just wait. You're going to be early. Maybe 3 days, maybe 3 weeks, but you're going to be early. And I think an abundance of caution on pulling the trigger short is still in effect. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Wow. Trying to find the this one had earnings. MIDD, Commercial Food Service Equipment. Man, this thing's taken a beating today. Back down through its previous lows of 107. Now, it didn't look good going into earnings last night. But man, talk about it. Your last major low was this November 14th low at 107.53. You could also look at the 114 low, but it gapped down and went and blew through all these down to $100.45. This may be the worst beating of the day for earnings. I'm looking at out here. Here it says that the Food Processing Equipment Group, we've had several anticipated orders not materialize. The decline in revenues reflects the significance of large projects on this business segment. Other large products. Well, anyway, that one took a hit, and a big one today. On the hit parade of other losers, we had Monster Energy down. It's down about 7.5%. It's going back through its lows of July 5th, 2017. That was $49 with 2 million shares. You also have the August 9th low of last year at 3.4 million shares at $50.79. You've blown through both of them down to 48.09 for the low of the day. And you know what? Everybody wanted to buy this thing for a while, and just kind of fatty, isn't it? Not fat, but fad, F-A-D, on this one. On the upside, Win, man, after taking a horrible beating, it's back up to previous highs. But again, certainly nothing like the volume that you saw in this one. Well, this thing came down on 22 million shares on the 26th of January. You're back up into it with 2.2 million shares. But it is back up here and not giving it back today. So that has to tell you a little bit about some of the way these things are working. Now we had some earnings with KGC. It's down 10%. I remember reading the articles this morning, it was production. They just couldn't get the gold out of the ground. This is back almost to its February 27th low. And man, everybody that was in this back to February 27th, pretty much, well, I guess you got a little bounce out of this one. But man, you got a lot of people over the last 2 months in this in a losing position. So that's no good. Not on earnings, but just on the SMHs moving higher. You've got a decent pop out here, but still in a downtrend, although it could get very close to breaking that downtrend today, is Micron. Energy still isn't accelerating. Right now, we're looking at 30 million shares compared to this candle down that had 50 million shares on the 27th. So, yeah, you know, when we're talking about the SMHs, we're starting to look at some of these stocks hit some fairly impressive resistance levels. Let's take a look at Intel real quick. Its brethren. Yeah. Take a look. Intel's up, kind of light volume out here, 13 million shares compared to this down day of 70 million shares. But again, you're hanging up here. You're not giving these things back. We've got an hour and 15 minutes left to go. I think the win would be a close back above 53.48, which is that March 13th high. As long as you hold that high, I suspect that Intel's going to be okay. Looking at the options, I'll find out more tonight, but certainly doesn't look like there's a whole lot left in Intel between now and expiration, with a expiration in the options pointing to about 55 bucks. So I don't, again, a lot of these stocks that have made fairly decent runs back off lows look like they've got a lot already in them about what they're going. The big winner today, of course, is TRIP, and this is TripAdvisor, back up to its resistance level. In fact, let's go back just a little farther so we can see this just a little bit plainer. You've got some big high volume lows that never were tested in this one, which would make it kind of hard to get into it. You even had a higher volume low from April 27th compared to the March 2nd low. Volume increased. But apparently everybody and their dog was wrong. Last high came in at 19 million shares. That was February 15th. Today you got 14 million shares. So you have the opportunity to at least match that 19 million shares from February 15th. You know, I'm going to say this thing probably going to get up here into this candle of May 10th, 2017. That was $50.95. And that was a right, well, if you go back a little bit farther, where this thing was gapping down. In fact, this is one of those giant three-gap play setups out here. And not only did it hit after these three gaps, not able to go back and fill them, but basically just a huge consolidation down to $29.50. Again, you really don't have any test of that low either, which always makes me wonder about what's going on in these travel stocks. I want to keep on typing price lines, but it's now bookings. The BKNS, is that it? Bookings.com? BKNG. BNKG. Okay, we got it there. Yeah, 1202. That's from last night. BNKG, right? Did I do it right? BNKG? BKNG, I guess. BKNG. Man, I hate it when these people change their ticker. It makes it tough. Now, nothing going on in that one at all, really. A little doji out here to the side. This thing's right up at resistance, so not a lot there. In fact, let's take a look at TWLO2. We had a lot of movement after hours last night. This one's back up with strong volume, by the way, up through two minor gaps at 45 or 46 and 50 bucks. So this looks like it at least come back to this gap down that goes back to October 10th of 2016. That was about 8.7 million shares. You got 8 million shares already today. So that looks like a move to 60 is in the offing in Twilio. So a good day for that one. But it's certainly a stock picker's market. As they say, it's a market of stocks, not a stock market. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And another one out here breaking its lows today. This is the $13.99 low from November 3rd, 2017 that had 9 million shares. Through it was 16.9 million shares as we speak. Now this one actually opened higher, if this candle is right, and sold off all day long. They may have had earnings call during the market conditions or something come out here. Anyway, this one's blown through, but still 10 cents above that November 13th low, but certainly all over it. So watch that in the next couple of days. Maybe these are some kind of giant washouts in some of these things coming. This is a beauty company, which is kind of an interesting play out here. See if anything else out here really catches my eye for people talking about it. Electronic Arts probably the most interesting. Earnings were poor, actually. Guiding up, though, they're up $8 today. It's up 6%, and testing its previous highs of 131.01. What is it? 131.70. So it's certainly through that. Got to 132.44 as the high. But you want 15 million shares. You got 5.7 million shares. This is another one where I think a lot of people were getting short on this one pre-earnings. And you've got a little gap up here, but not a lot of juice. I'd watch this one for a few days. Earnings weren't that good, but I just think a lot of people far too short this, and all it took was a few people to start buying and a few people to start covering, and that's all she took. So, again, you can be right and still be wrong. Doesn't make it any better, does it? In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.